How much is in your savings? A few thousand? Maybe 5, 6 figures? Or maybe nothing? Well, I want to tell you straight up, it doesn't really matter.
Hold on.
Now, you might think that's crazy to hear, and if I didn't know what I'm about to tell you, I'd agree with you. But before I get into that, I want you to know why it doesn't matter how much is in your savings. What matters is why you think a savings account is a good idea in the first place. So understandably, you might be a bit confused, but my point here is, it doesn't matter how much you have saved, because what I'm about to explain to you will make you want to stay as far away from banks as possible. Now, as you clicked on this video, you probably know the effects inflation has on your money and purchasing power over time. You may have even heard of fractional reserve banking before. If you haven't, it's simply a system that allows banks to lend typically 90% of customer deposits to other customers and then charge interest on those loans. Okay, so what's the purpose of knowing this? Well, for me at least, the first time I learned about how inflation works and what fractional reserve banking actually is, I was horrified by what the banks and financial institutions were allowed to do with everyone's money, literally causing recessions by creating money out of thin air. It was insane to comprehend how it all works. Before this, I was blissfully unaware about what the banks were doing. I never even questioned where my money went once I deposited it, just presuming it was sat in my account waiting to be withdrawn. Except, it's not actually there. It's just some numbers on a screen telling you the face value of your account. But 90% of that money isn't even yours anymore. It's just out in the world, part of someone's mortgage or car loan. And now the bank just creates a big IOU the second you deposit your money. The worst part of all this is that most people have no idea this is even going on.
How is this possible?
Now, of course, banks are legally obliged to put this information in their terms and conditions. But let's be honest, do you read every sentence? Even every paragraph of a terms and conditions notice? And the banks know this too. This is why I believe 90% of people are completely unaware that the money they see in their bank isn't even there. So what's the solution? Is there a solution? You probably don't trust the banks with your money now. You want to know where the hell you can put your hard-earned cash.
Of course.
Well, ladies and gentlemen, let me tell you the solution. Life insurance. I know, it's a bit strange. What's insurance got to do with money or your savings after all?
It doesn't make any sense.
Or maybe you're thinking like some, you maybe want to be a bit careful with insurance because some people have the opinion that they're just there to rip you off.
Fun coupons!
Well, in this case, it's actually the opposite.
What?
With typical insurance policies, you're obviously just paying the premium to cover you for whatever the specific insurance covers for, in the event that you may need to make a claim. Whether that be for car insurance, home insurance, even pet or holiday insurance. But in this case, we're on about life insurance. Now before clicking away thinking I'm just trying to promote life insurance, just bear with me for a second. There is a reason I asked you about your savings and banks before the insurance. That's because there's a handy little trick that only a few actually take advantage of. Unlike the average person working a regular job, maybe making around 50, 60k a year, a bit less in countries like the UK, you're not really aware of how quickly your money devalues. With billionaires and millionaires, they have access to obviously their millions and billions. However, it's not just sat in a savings account earning 0.5% a year. You see, the wealthy understand how to take full advantage of the systems available in the world and how to maximise the efficiency of their money. Now, obviously, not every millionaire does this because, frankly, a lot of people like celebrities, actors and actresses and many more don't have a firm understanding of how money works, especially the younger generation. I mean, just take a look at this girl from Euphoria, struggling to survive on 300k a year. But it's purely a lack of financial education. Now, obviously the older generation were taught to save all their money, buy a house, and put a percentage of their money into a pension. But times have changed. Have you seen how much harder it is to save for a house now versus 40 years ago? No wonder millennials and Gen Z think boomers had it easy. But the reality is, people are just taught what works best for the time. So of course, if 1 year's wage is enough for a down payment on a house, that's almost a no-brainer. But in the 21st century, with soaring house prices and crazy levels of inflation, even higher than they actually report, you simply can't save your way to a house or retirement. So the only solution is to simply understand how money works, how it's created, and how to use the systems that exist to take full advantage of and maximize the efficiency of your money. And this is where whole life insurance comes in. I'm about to explain to you the exact same system that some of the richest people in the world use. The millionaires, the multi-billionaires, even the most successful entrepreneurs of all time have used this. The likes of Walt Disney. Now, if it's any consolation, this might be a system that the rich use to their advantage, but it is more than accessible to the average person. You don't need millions or billions to set it up, or keep it going. It's more so how you structure the policy and how you manage it that is most crucial in order for you to properly benefit from the system. So how does it all work then? Well, whole life insurance provides permanent death benefit coverage for the life of the insured. In addition to the death benefit, it also contains a savings component in which a cash value may accumulate. Interest occurs at a fixed rate and on a tax-deferred basis. The insurance lasts the policyholder's lifetime as opposed to term life insurance, which is only for a specific amount of years. The death benefit is paid out to the beneficiary or beneficiaries upon the policyholder's death, provided that the policy was in force. And then finally, the component of the policy that we're most interested in today. Because of the policy and its cash value, the policyholder can withdraw from or borrow from their cash value. And that is, as simply put as possible, the best alternative to a savings account. Great, that's brilliant. We know what it is and its benefits.
Pretty much. Yeah.
But even so, we still don't actually know how it works in the real world. We know how we've got a cash value building up over time as we put money away into our policy, and that's slowly accruing interest and compounding over time in our favour. But let's say after a few years we want to finally use our cash value as the savings account alternative we intended to use it for. Well, the amazing part now is you have two options. You could forget about the policy and just take your money out and withdraw it, or you could request a loan from your insurance company and borrow against your policy's cash value. Now obviously the caveat here is that you can't borrow against 100% of the cash value. However, whole life insurance lets you use up to 90% as collateral to borrow against, which I personally think is more than enough, and really you shouldn't be considering borrowing anywhere near as much of your cash value. I'm far from an expert on this despite my research and for the purposes of this video, but I came across a great simple explanation by The Money Advantage on the process around taking loans against your policy and how it actually works, so definitely check that out. And as far as the structure of your policy is concerned, I found a number of people breaking down and analysing the best way to structure a policy. This specific video by Life 180 is amazing, and some of their other videos about whole life insurance policies are great too. This specific one is the 2022 updated version, which goes over bad policies and the best policies, and what will work best for you to grow your cash value as quickly and efficiently as possible. It's definitely worth the watch. So hopefully now with this information, if you have been considering setting up a whole life insurance policy, or if this video has made you consider setting one up, then maybe you can make the decision as to whether or not it is right for you and your family. I do want to just say a disclaimer that this video and all the information in it is merely for entertainment purposes. I am not a financial advisor. I do not provide any tips or advice for legal reasons, obviously, and I just generally want to give some insight on the topic, as for me personally, I think that not knowing about this type of insurance policy existing and it being somewhat hidden from most people is quite bad in my opinion. Because I think that it's in everyone's best interest to do their own research and find out about the ways in which you can secure your own finances, and understanding the systems and policies that exist in the world and how you can use them to your advantage and fully capitalize on them. So that's about all the info I have on whole life insurance and alternative solutions to savings accounts. If you've been considering setting up a whole life policy, or if this video has introduced it to you or helped you in making a decision, then definitely leave a like on this video, and Feel free to share some of your own info on your situation perhaps, or if you agree or disagree with me on anything I've said, mentioned or brought to light, then I'd love to know your thoughts. But anyway, thank you for watching this video. If you want to see more videos like this, be sure to subscribe, and I'll see you in the next one.